My name is Patrick King. I'm a tax partner at MHA.
And hi, I'm Tony Medcalf. I'm also a tax partner at MHA. And today we're going to be talking about announcements in the autumn statement and the effect on business.
So business has been crying out for a bold plan for growth. The country clearly needs to address the lack of growth, the lack of productivity. Was this autumn statement something that addressed that, Tony?
Yes, I mean, a lot of the media trailed that it was designed to boost the supply side. And there were some interesting points there. Something that we already have, which is full expensing of capital expenditure. So what we do already have is we have the system where we can claim £1 million under the annual investment allowance to get full tax relief in the year of purchase on any new and used acquisitions. But for those businesses that do spend more money on plant and equipment and IT, etc., to boost that productivity that you just talked about, Patrick, then there is an unlimited amount now for any new acquisition. So any new acquisitions of plant above that £1 million, then again you've got full income tax, corporation tax, relief against it. Now, so previously what we did have was actually a 3-year time window, so it ran out in 2026. So business effectively said that's not long enough for us to be able to make the decisions that we need to make in investment, and therefore that's been made permanent.
Yeah, so certainty, as business always cries out for certainty, we appear to have certainty, although of course it will depend on the election and the possible new incumbents in number 10 and number 11 who may have a different view. But subject to that, yes, some certainty.
Yeah, I think I mean it's sort of aligned, isn't it, in with the increase in the corporation tax rate. The corporation tax rate went from 19 to 25, but certainly this government had the intention of having this full tax relief available for the acquisition of plant for the business in order to reduce that, because you get that tax relief at source. So, I think it's always been there. It's just that they've just waited for the time to be able to actually put it in effect to make it permanent.
Yeah, so that's obviously a positive move for business, although with a backdrop of increasing taxes. But nevertheless, it is targeted. It's targeted at encouraging investment, which logically leads to get a better productivity. So that's good. I wasn't quite so sure about the national insurance changes. I think we were probably expecting a change there to be on the corporate side, so employers' national insurance, but that didn't happen, did it?
No. National insurance was reduced only for employees, and only in the band between the personal allowance of 12,500 and the higher band of 50,000. So it was quite targeted. Obviously, it impacted on most people that are employed. There was no impact on employers' NIC, which does have can actually have the impact of being unlimited in its effect, and therefore its tax cost. So yeah, the employees' national insurance was reduced from 10% down to 12%, but only in that band between 12.5 and 50. All other rates were kept the same for business effectively. And what about self-employed and partnerships?
Yes, well, there was a small reduction there as well. The abolition of Class 2 national insurance, which is the what used to be the weekly stamp for those who are old enough. Now it's just a monthly payment that people do. And the reduction of, I think it was 1% on the Class 4 national insurance that's self-employed. So the reductions for self-employed probably not quite as generous as those for the employed, but at least they are getting something. So it was a bit of a giveaway to people who are in work, which has one eye on the election, I'm sure. Maybe it would have been better targeted if it had been employers' national insurance to help make jobs cheaper and therefore encourage employment. But you can see why they didn't do it, given cost restraints. It would have cost a lot more money to do that, I think.
Well, interestingly as well, the tax cost of dividends and extraction of dividends from a business, they were unchanged. So they had a hike of the 1.25, which was the social care levy, that was then on the national insurance side then removed. So that came back down for employees, and then employees have now experienced a further 2% cut from 12% to 10%. So the disparity that owner-managed businesses had in total tax cost of extracting money from their business and taking dividends, as opposed to through a salary, has been greatly eroded away.
It's been narrowing for a while, hasn't it? I think there was virtually no difference. I haven't done the numbers yet, but I suspect we're pretty much equal now, if not perhaps even more expensive on the dividend side. It's something that we'll have to do some number crunching on to check. I think that probably sums up the main areas of change that impact business and go towards growth.
Well, thank you for listening and watching, and I hope you found it useful. And if there's any queries or any questions, please feel free to contact anybody from the MHA tax team on any issues that you have from the discussion that myself and Patrick have had today.
If you do want any further information, please also visit our website or the MHA hub, where there should be more information that may be of assistance.